Hey there, and welcome back to the deep dive. We're diving into some pretty interesting data today, all about legal tech and GRC funding in 2024. And it all comes from Raymond Blyd's analysis on legalcomplex.com. It's fascinating stuff, some real surprises in the numbers.
Yeah, what's really striking from Blyd's analysis is that legal tech funding just exploded in 2024, like a 120% increase, hit a total of $8.31 billion. But here's the thing, fewer companies actually got in on the action. Only 322 companies got funding, down 13% from the year before. And the number of investors, that dropped too by 19%, down to 647. So what does that tell us about where legal tech investment is going?
To me, it sounds like the game is changing. The stakes are higher. It's not about spreading bets around anymore. It's about making fewer but bigger bets. Like the whole landscape is consolidating.
Exactly. Investors are being way more picky. They're looking for companies with a real track record or, something totally groundbreaking.
Yeah.
Now let's talk about another trend, debt financing.
Oh, yeah, let's get into that. That was a huge chunk of the funding, right? Like 61.5%. That's something like $5.09 billion. But for those of us who aren't finance experts, can you explain what debt financing actually means, like in this specific context, and why it's suddenly so popular?
Sure. So in this case, debt financing usually involves private equity firms or litigation funders. Basically, they're lending money to legal tech companies. And of course, they expect to get paid back with interest. Now, why is it so popular? Well, think about it from an investor's point of view. When the economy is a bit shaky, debt feels like a safer bet. It offers a more predictable return compared to, the ups and downs of equity investment. So it's all about minimizing risk.
Yeah.
While still getting a piece of the pie.
Makes sense. So it's kind of like a safer bet in a maybe not so safe market. But hold on, didn't venture capital also go up?
Yeah, it did. Venture capital funding went up to $3.22 billion. That's almost a 62% increase. And the average size of those venture capital rounds, that grew too. It's $7 million, a 27.3% jump.
So VCs aren't exactly abandoning ship. They're still putting money into legal tech. Just maybe more carefully now, more strategically.
Right. But there's something else that's pretty interesting, maybe even a little worrying. Burn rates have increased.
What does that mean exactly?
It means companies are burning through their cash faster, which means they have less time to become profitable.
Oh, that doesn't sound good. If they're spending money that quickly, it makes you wonder if they can last long term. Are they being smart about their growth or just trying to grow at any cost?
That's the big question investors are asking. Now, Blyd also talked about a couple of specific companies, Clio and DeepL. Clio seems to be moving more towards fintech solutions rather than just legal stuff. And DeepL, they're a great translation tool. But they don't really seem focused on the specific needs of lawyers.
I see. So they're both successful. But it kind of raises a question a lot of legal tech companies face. Should they specialize, or should they try to appeal to a wider market?
Yeah, it's a tough one. And Blyd pointed out something else, too. Document-focused legal tech companies are having a hard time.
Really? Why is that?
Well, for a few reasons. First, it's not that hard to create document management tools, or e-discovery tools for that matter, so there's a lot of competition. Second, they're going up against giants like Microsoft and Google. Those companies have tons of resources, and they already have all the infrastructure for document management.
That sounds like a tough fight. Speaking of fights, what about mergers and acquisitions? The total deal value tanked in 2024, down 84% to just $422 million. And there were fewer deals too, down 36%. What's going on there?
It's a big shift.
Yeah.
And yeah, it probably has to do with valuations and the whole AI thing looming over legal tech. Remember the case text acquisition by Thomson Reuters?
Yeah, that was a big one.
But it also shows this trend. Valuations are going down, especially for companies that aren't focused on AI.
Oh, so the AI effect is real. It's like everyone wants a piece of AI, even if they don't really know what to do with it yet. But here's the thing. Blyd said that a lot of the top-funded legal tech companies, they aren't actually AI focused. Not yet, anyway.
Exactly. It all comes back to the hype cycle. AI and legal tech is still in its early stages. It's a lot of hype, and it's hard to separate the real innovation from the noise.
Yeah, how do you tell who's really doing something new with AI and who's just trying to ride the wave?
That is the question, isn't it?
Right.
And something we'll dig into more as we continue exploring Blyd's analysis.
So it's like we need a BS detector for AI companies. But seriously, this brings us to the big question. Are any of these legal tech companies actually making money? Or is it all just potential for now?
That's where Blyd's analysis gets really interesting. He found something kind of surprising. There are profitable AI companies out there, in the legal space, I mean. But they're not the ones you'd expect. They're not focused on law firms. They're working in areas like fintech, regtech, even government applications.
Wow, that is surprising. I would have thought law firms would be the main target. I mean, they have complex needs, big budgets. What makes these other sectors better for AI?
Well, a few things. First, their needs are more defined. I'm talking about fintech companies, regulators, government agencies. They're dealing with specific regulations, structured data, clear problems, and AI is really good at solving those kinds of problems.
So it's not just about the tech itself, it's about finding the right problem to solve for the right customer.
Exactly. It's about market fit, just like any business.
Right. This makes me think about all those people who say AI is going to replace lawyers. Maybe it's not that simple.
Yeah, I don't think AI is going to replace lawyers, at least not entirely. I think it's more likely to help them, to augment what they do. Think of AI as a powerful tool. It can help lawyers be more efficient, more effective. Imagine being able to instantly analyze tons of case law, to find relevant precedents, or even predict the outcome of a case.
So AI is like a super powered assistant for lawyers. It does the grunt work
Yeah.
and lets them focus on the more human stuff, the strategy, the creativity. But I do wonder about the downsides. Could this lead to job losses in the legal field?
That's a valid concern. We always have to think about the societal impact of new technology. But historically,
Hmm.
advancements in technology create new jobs too, even as they displace others.
So it's more of an evolution. The legal profession will change, some tasks will be automated, but new roles will emerge.
Exactly. It's not about AI taking over. It's about humans and AI working together.
Like a partnership.
Right.
Well, speaking of emerging fields, let's talk about GRC, governance, risk, and compliance.
Yes, GRC. Now, this is a sector that's really taken off. According to Blyd, GRC raised a massive $30.96 billion in 2024. That's a 31% increase from the year before. And you know what? We're seeing similar trends here as with legal tech. Fewer companies are getting funding, but the investments themselves are bigger.
It sounds like investors are realizing how important GRC is.
They definitely are.
But here's a stat that blew me away. GRC funding in Africa went up by 8,300%. 8,300%. What's driving that?